Welcome everyone back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Tuesday the 3rd of March. Looking at euro-dollar, which has been almost incessant in its rally higher, hasn't it? A really strong move. You can see the technical implications of this. There was a massive sort of bearish implication of the breaches of the support at 109.80 and then subsequently 108.75. But what a rebound from 107.75, and currently sort of back above the key band of a pivot line really that had been playing out through sort of August into February between 110.65 and 111 figure. And it's interesting that they're having closed above that. It's sort of become a basis of support today. 111 big figure being the day low today before an intraday rebound. Market currently almost flat on the day. So really interesting sort of move that we're seeing on euro dollar. A little bit of a consolidation, you can argue. And I sort of floated the idea, the fact that in the morning report, we're now at 70 on RSI. Pretty much the limit of the December to January rally and also the October rally. They were the positions at which the RSI just started to falter. But what I would say is that was fairly, I use these sort of terms sort of reasonably loosely, but they were sort of pretty normal market conditions, whereas obviously at the moment we're seeing sort of markets flying around all over the place, and really significant changes in rate expectations and subsequently moves on currencies. So we've seen this rally on euro dollar, huge rally, but is it a move that's going to be technically restricted by 70 on the RSI? Well, if you look at the MACD lines, there is still room to run in a recovery, accelerating higher on the MACD. Stochastics up into strength territory, really strong territory, but not decisively stretched, you would imagine, on the stochastics really. So having broken out above 111 figure and holding that as an initial support, I think that's a fairly decent breakout, and 110.65 would now be your gauge. If you started to close back underneath that, you'd suggest that that rally would be rolling over. But for now, we are holding that rally. You can see here on the hourly chart, pretty strong moves through the hourly RSI. Look at that, every time it gets anywhere near 40 to 45, the RSI, on the hourly RSI, that's a buying opportunity. MACD lines, anything around neutral is a buying opportunity. Stochastics, just bull crossed higher on the hourly. So is this now the opportunity to once more get on that train and run higher? Certainly looks as though that this breakout is still fairly live. You've got the move that hit 11.85 yesterday. That was above this reaction high of 11.65 or 11.70. And effectively that reopened 12 figure to 12.40 as the next resistance area. So there is still upside potential, I think, in this move, even though the RSI is at 69. And I think any sort of consolidation that hits and builds support at or around or above 10.65 to 11 figure, I think is probably a decent buying opportunity, certainly given where the hourly chart indicators are at. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.